for this really important discussion, and welcome to the call.
Thank you.
So you're going to get to know these guys in a bit more detail, but before we dive into the discussion, just make it valuable for you. So a few things that will help with that. This session is being recorded, so you can receive a replay of the live event or have a look at it again on the YouTube channel. Use the live chat to drop in any of your questions or comments and reactions at any time. We'll also put a few live polls in throughout the session, so keep an eye out for those. We'll try and cover those questions throughout the session, but we will have some time towards the end for some dedicated Q&A, but do feel free to ask questions throughout the session, and all of the resources that we mentioned will be available on a downloads page, and we'll also email you after the session there, so we can share some of those links in the chat as well. If you do need any help, just reach out on chat and the team will pick those up for us during the session. So without further ado, let's dive into the key areas that we wanted to chat through today. We really wanted to make this a really interactive session for you. I know there's a lot of webinars out there at the moment that kind of give you all the technical detail and all of those sorts of things. We'll put a few slides up that have that level of technical detail, but the intent really today isn't to sort of dive into the technicalities of things, because we can get a lot of that information. It's really to bring this to life in terms of, what's required and what's coming with regards to mandatory disclosure reporting, some of the challenges that might present to organisations, but then also the opportunities, and just talking to the panel, bringing that to life. So feel free to ask questions, as I said, as we go through that. And we really want to shift the conversation around how compliance is actually an opportunity for business growth, and then some of the things that we're seeing in the market that are useful for helping to streamline that reporting and moving forward there. So I know many of you are probably dialed, watching this because your organisations are sort of starting to become aware of some of the requirements that are, coming into, especially the Australian landscape. If you are looking at this webinar from outside of Australia, it's still useful for you. A lot of the Australian frameworks are aligned to the IASB IFRS standards, which are international standards. So, for instance, adopted by countries like Singapore, etc., for their disclosure reporting as well. So I'm sure you'll find it useful as well. So, Rob, I just wanted to sort of open up. If you could just maybe talk, introduce yourself, maybe a little bit of your background, but then just talk from a finance perspective. What are some of the changes? We've been talking to a lot of directors, and they're saying that the changes that are coming through are almost like some of the biggest legislative changes for reporting in a generation.
Yeah, absolutely. So my name's Rob. I'm the director of my own company, RJH Financial Services. I've also been, I've held a few CFO roles and financial controller roles. So what does it mean? It means a lot of change, a lot of uncertainty for people like myself and people in similar positions. Mandatory climate disclosures are now mandatory. They're part of the Corporations Act, Chapter 2M. And they're mandatory from now. So from periods starting 1st of July 2024 for Group 1s, and we'll talk about Group 1s, 2s and 3s. Group 1s are basically the really big companies, but they have to disclose Scope 1 emissions, which are direct emissions, Scope 2, which are indirect, and importantly, Scope 3. So even though your group of companies may not require mandatory disclosures now, you could be in the Scope 3 of those bigger companies. So it's really important that you prepare yourself for this kind of reporting. And as we'll discuss as we go along in the webinar, there are lots of other benefits of disclosing this kind of information anyway, in terms of finance, in terms of reputational. I think it's a really good opportunity to grow your business. But for finance professionals like myself, it is scary. It's new. I think we're really good at picking something up and repeating it and maybe improving on it. But something new like this is definitely a big change. So yeah, I urge you to read up, listen to webinars, and get help to make sure you're up to speed.
Yeah, thanks, Rob. You know, I think we're not intending to give specific advice to any organisations here, but what we would recommend is if you're trying to figure out which group you're a part of, definitely reach out to your accountant or your auditor, and they'll be able to give you, much more detailed, specific advice, on that. Jackson, did you want to maybe introduce yourself in terms of, and I'd love to hear your thoughts on, what you're seeing in the market and where, finance teams and sustainability teams are at in their journey. One of the things that we've noted is that, you see finance teams have been operating very separately in organizations to sustainability teams, but now there's a need for them to sort of kind of work together, and some of those sustainability teams are moving in under the finance function. So love to hear some of your views.
Sure. Thanks, Joe. And hello, everyone joining. My name's Jackson. As outlined earlier, I lead the sustainability function here at Workiva across APAC. It's great that we heard from Rob here around what's ahead of companies being mandated to disclose their data. And what's interesting about AFRS, the IFRS as drawn from the AASB standards here, is that in addition to the metrics, so scope 1, 2, and 3 that companies have to disclose, they also have to disclose their governance and their strategy and risks and opportunities, and then they have to have that data assured. And this may sound complex, it may sound daunting, but it's no coincidence that we started with Rob, because these same principles of carbon accounting pull from financial accounting. The same idea of boundaries and the same idea of consolidation approach pull from the same principles. And in fact, carbon accounting has been around for a really long time. It's only now that companies are being forced to mandate that it's approaching them as this new concept. But don't fear. These are well-founded principles that pull from those that bedrock of financial accounting, and the process is fairly straightforward. And I'm really looking forward to outlining some ways that companies can take to actually make this mountain that you have to climb a little less daunting.
Yeah, good. Thanks, Jackson. It'd be good to introduce yourself, Aaron, and hear from you. I know, as the director and founder there at Young Folks, that you've been on a journey yourself. So I'd be interested in terms of, what was your reaction when you started to see all of these different frameworks and standards coming out, and it's like almost like an alphabet soup of acronyms out there, and yeah. So tell us, what's the journey been like for you?
Well, being in an integrated marketing agency, being in the alphabet soup of acronyms is our specialty. Marketers love an acronym, but certainly these updates were real. We saw it as something that's big, it's significant, and also presents a lot of opportunity as well, to really connect the dots between the storytelling that happens on the marketing side and the narrative in the reporting that needs to be aligned with that as well. So that really awesome opportunity to align messaging, to increase transparency and build trust. So yeah, we see it as a really exciting thing. I'm sure, as Jackson put it so well, it's such a mountain to climb. But it's certainly something that we see as worth doing, particularly for organisations that are looking to really enhance their communication of their impact and their ESG strategies, and appeal to both a business and consumer base that are increasingly expecting this kind of stuff from organisations and the companies that they buy from and interact with.
Mm-hmm. When you're working, Aaron, with your clients there and their consumers, are they seeing consumers sort of becoming skeptical of organisations in terms of greenwashing, and what sort of perspectives have you been gathering around this?
Yes, they're certainly becoming more dialed into it. They understand it far more than, say, a decade ago, where, all of the kind of typical design tricks like putting a green cap on laundry liquid made it seem eco-friendly. That stuff's definitely falling by the wayside. Consumers have really wised up to that. And I think there's also a real risk of brands, rolling a little too close to the sun, shall we say, when they make their sustainability claims, and getting called out on social media when things aren't following through. So we're certainly seeing in the clients that we're working with a bit of a mixed response. There's a real excitement internally about the initiatives that they're putting in place with their ESG frameworks and their impact reporting and their carbon accounting. They're really excited about the progress. But then the outward facing story is often a little more reserved because they're afraid about putting a foot wrong, or they want to make sure that everything's triple checked. And I think to an extent that's probably a good thing. I think marketers can often be labeled a bit cowboy, and making exciting marketing claims that we know are going to convert is often the go-to, but it needs to be validated and substantiated.
Joe,
Yeah.
do you mind if I just ask Erin a follow-up question on that? Would that be okay?
Go for it.
Erin, you work really closely with customers around their messaging. I've got a question around the terminology of ESG. Obviously we see in America it's a really loaded term politically. Do you see the same impacts here in Australia? And how do you think consumers are responding to ESG or sustainability messaging?
We don't see the negative side, although I'd probably say that we engage with the sort of clients and broader community that engage with us are typically already sold on that. We're kind of preaching to the choir, so to speak. So we see more organisations are championing their ESG kind of frameworks and their impact frameworks. And we see, I think in Australia particularly, like Australians are really connected to the natural environment, where it's really kind of like we're brought up with it. It's that you spend your summers at the beach or at the lake or at the river or at the farm or in the country, in the bush. It's a real big part of our kind of identity as Australians. And so when there's threat to something that actually sort of intrinsically linked to our identity, consumers kind of go, okay, well, this sounds like it's pretty important. Obviously, there's a big vocal group of consumers out there that are like climate change deniers and such as well, and they don't see any of this stuff as valuable, and it's a very difficult job to try and convince them otherwise. But there's certainly a growing base of consumers that are increasingly expecting companies to be more forthcoming with their information, have a stance on sustainability and environmental impact and social impact, and be talking about it and following through with that as well.
Great.
Yeah, that's good. We were having an interesting conversation where we just sort of preparing for this webinar, just around sort of the kind of having, you kind of, when you look at mandatory disclosure and you look at the regulation and everything like that, there's this sort of sense of the weight of it, and then also like having to feel like you're getting things perfect, etc. And then we've got voices like cancel culture. I think you were talking about, Erin. I'd love a few more thoughts around that, because I think what we're kind of interested in as our business and a team there as well is not just sort of the letter of the law, but then the spirit of the law. And what we're trying to achieve is not letting perfect get in the way of better, and just making sure that we're making progress on our sustainability journeys.
Yeah, absolutely. I think there's so much in there, as we were talking about earlier, that there's often, it really plays into that, like internally within companies, there's a real desire to make progress and real excitement about it. But talking about that externally, there's that fear of putting a foot wrong. And I can't remember who the person was, but I remember seeing this video on LinkedIn. It was a sustainability consultant in the UK talking about how there's this real perfectionism in the sustainability and impact space, and how we don't share our journeys and we don't talk about what we're doing and the progress that we're making as openly as we perhaps would about other things, particularly when you say compare the impact and sustainability reporting industry to like Silicon Valley, in the Web 2.0 kind of phase, where the catch cry of Meta and Facebook was like move fast and break things. Like it was fail first, learn as you go, work as fast as you can. And I think in the face of massive climate impact, we need to bring a little bit more of that mentality to how we address sustainability reporting, designing our ESG frameworks, designing our impact frameworks, that move fast and break things, that acknowledgement that this is really urgent.
Yeah.
And in order to both prevent further risk and also capitalize on a massive opportunity, we need to move fast. And that probably means we're going to break some things along the way. And we need to be okay with that. And I think collectively look at progress in the sustainable space as a good thing over, saying nothing and keeping our cards close to our chests for fear of being called out or cancelled or, dire repercussions. And that's really tough when there is a cancel culture that's kind of increasingly growing. But I think certainly in the B2B community, we can do things like this, have these webinars, talk about these things, share what we're learning openly, and find ways to communicate with our customers and our stakeholders and our shareholders about the progress that we're making, so that we don't have, scenarios where there's all these 2030s net zero claims floating around out there in vast amounts of companies that so far there's probably not been too much progress on.
Mm-hmm. Yeah, interesting perspectives. Rob, I'm interested in your thoughts here as well, because I guess the three of us we probably come from more organizations where clients are proactively reaching out for whereas your clients are sort of maybe a little bit more in the traditional sectors, etc. And then also you're sort of seeing the dialogue that's going on at the C-suite and also board level. What thoughts have you got around this?
Yeah, absolutely. Because the fact of the matter is that lots of organizations right now don't have to do this yet, but they will, it's coming. But I think the message from Erin is actually really important. So for me, it's about data collection and working out what the baseline actually is for your organization. So you don't have to search for perfection straight away, but it is really important to know what your baseline is in terms of these ESG measures and sustainability measures, because the first step is measuring your baseline, get into what you do right now. The second step is doing better, and it doesn't have to be perfection. It doesn't have to be net zero by 2030 or some outlandish goal. The first step should be just to do better than what you're doing at the minute, and then you just build from that. So I think the message from Erin is actually really, really poignant and really important.
Yeah.
To put my hand up and admit a mistake that we made, I want to add to something Rob said in that, like, establishing the baseline. So when we've been really progressive with our sustainability journey from the get-go, and one of the first things that we wanted to do was get our B Corp certification and get our Climate Active certification. And these were two things that were like hot on the docket for me, because I'd worked in a really large organisation that had done these things that had really inspired me. So I wanted to do it within my own organisation as well. And so we got stuck into it straight away. And the baseline that was established for our Climate Active certification was based on us being a company of 4 during lockdown that primarily worked from home, which is an impossible baseline to improve upon as we grow. But a condition of Climate Active certification is that you are improving on that baseline. And when we've gone through the process of getting all of our data into the Workiva platform and getting that real clarity on where everything's sitting, the baseline that we'd established pre-Workiva when we were doing everything in spreadsheets, it was very clear to us that there wasn't much more to trim. In fact, as we've grown and we've added more employees and we've gone from working from home to having a premise, there's so many caveats that we need to be putting into our Climate Active disclosures on why we haven't been able to reduce our emissions, because we were starting from such a low baseline. There was nowhere to go. And other than close up shop, there wasn't really anything else we could do to reduce emissions any further than we'd already kind of done so. So that's a good example of if you don't get your baseline clear first and you jump into certifications too soon, sometimes you can shoot yourself in the foot and then find it difficult to kind of have those conversations later when you're trying to navigate caveats around recertifying.
Yeah. That's good. Jackson, I was just kind of thinking that probably a number of people on this webinar are probably more in the group 3 category, in terms of reporting. What are you sort of seeing in terms of like maybe just outline some of the key steps that you think they should be considering? And there might be organizations that are out there that sort of say, well, oh, look, July 2027, that's sort of another few years away. And in terms of reporting requirements, what would be your, message to those types of organizations and thoughts there?
Yeah, that is actually a very good question, because we're getting that every day. I don't. What's the risk of me not complying immediately, or what's the risk of me just sort of doing this on spreadsheets, or not doing it until that time? And I think what I don't want people to feel is that there's this big stick at the end that's going to whack you if you don't get it right. In fact, Erin and Rob have both said that it's actually best off start now with the data that you have, irrespective of how good it is or how terrible it might be. In fact, the legislation is written around reasonable best efforts to compile this information, so you don't have to upend your entire business. Now, on the flip side to the stick, there is a giant carrot at the end for this. There is so many good reasons for companies to begin this process, irrespective of the mandatory requirements. If I think about best practice that we're talking to companies, in group one, they have done a dry run. They did a dry run last year, and they were engaging the year before, and they had been collecting data manually the year before that. And so, 2027 is a few years away, or a couple of years away. However, taking the time now to take those first incremental steps towards that goal will mean that you're not rushing at that time, and you can take that time, the intervening period, to understand the type of data that you have, the quality of the data that you have, where the gaps are, and how to align those to your organizational boundary. If you take that time now and make it a priority, you will get all those benefits of attracting more customers and being able to, do your bit for the environment. And, there's myriad other benefits, which I'm sure we'll get onto. But these are things like, you'll attract more staff and you'll retain more staff. You'll attract more customers. There was a great study by Officeworks, actually, who told us that two products side by side, one is a sustainability product and one is not, people will choose the sustainability product. There's one argument that says people will pay more. There's another argument that even at the same price, having a sustainability focused solution becomes a competitive advantage. And so when you think about it's coming, you should be prepared. Plus, there's all these other benefits. Moving now is the best remedy for that impending deadline.
Yeah. And I guess a question to all of you, and it maybe builds on the discussion around sort of the geopolitics that's going on there as well. Do you think these disclosure requirements and reporting requirements and legislation is here to stay, or do you think it's something more just of a trend? I have my own perspectives in that. I kind of really see that. I think we've really started to commit to this in Australia and Singapore and Asia. I think maybe in the US that's sort of the jury's out there, but certainly organisations that are doing trade with Europe as well, they're continuing to double down on efforts and initiatives there. But interested in your perspectives.
Yeah, from my point of view, it's absolutely here to stay, Joe. There's no doubt about that. You gave the example of Europe. I mean, I'm English, and that the UK have been building on this kind of stuff for a lot of years. So I think it's here to stay, and it's going to build. It's going to be more and more kind of prevalent in reporting. I might just add on Jackson's point, if I may, just on kind of the benefits of sustainability reporting and having a good ESG kind of mandate in your business. I work currently for a logistics company. It's a big logistics company here in Wollongong, and I asked the bank for some help in terms of interest rates and finance, and they weren't too interested in helping me out because of the industry we're in. There's a little bit of carbon floating around. And I just contrast that to my last role, which was a CFO role for a non-for-profit housing company. And even though the company was smaller, it had less people, less assets, the very same bank loved us. They wanted to work with us. They wanted to know our ESG story because they have their own ESG targets. And they were very open in having that conversation with me. So they really wanted us to be part of their business for ESG reasons. So it's not just talk, it's real, it's absolutely real. And I just had a really practical example from just shifting from one role to another in the same bank, same location, but two slightly different industries, and I got a very different result. So yeah, that's just a practical example of how much ESG matters in terms of making your business successful.
Yeah, absolutely. That access to capital is a really interesting example that you shared there. Yeah, yeah, good. Aaron, what are your thoughts?
Yeah, our kind of view on it is looking at the data from a sort of marketing perspective and what consumers and B2B customers are expecting from the organisations that they're engaging and purchasing from. And to echo what Jackson shared, there's the data's there. That, you know, McKinsey data had shown that 60% of respondents would pay more for a product with sustainable packaging. Nielsen IQ found 78% of consumers have reported that sustainability is important to them. And then when you look at that as a broader, you know, ESG related claims on products over a 5-year period and the cumulative growth, if a product has ESG related claims, it has experienced 28% cumulative growth over that 5-year period versus 20% for products that made no such claims. This has all come out of McKinsey studies and Nielsen studies. So when we look at that and we're advising our clients on how to incorporate impact and sustainability and ESG into their brand story, their values, how that then translates to their content marketing and their advertising campaigns, their product design and packaging and branding and all these things, the data's there for us. It's important. And even if the legislation experiences some changes as a result of changing governments and, you know, geopolitical unrest, we think that businesses, at the end of the day, we operate within capitalism, so they go where the money is. And even if you boil this conversation down to brass tacks, there's definitely money in ESG.
Yeah, your businesses have to take that more long-term strategic planning approach, not just following election cycles as well, right? So
Exactly.
yeah. Jackson, what are you thinking?
You know, I think there's a great irony with mandatory disclosures. You know, irrespective of all the good reasons to do this, you know, we've seen a movement in Europe with CSRD where group one is or phase one is not impacted, but there's been a sort of a delay and a somewhat wind back of the companies who've been impacted by CSRD. And then, of course, in the US, you know, there's very clearly a disruption happening there on the political front. And the irony with Australia and Asia is that we were seen as somewhat as a laggard for a really long time. Australia had a carbon tax and then lost it. And we had those climate wars where there was no great level of certainty around the policy or the impost on business around disclosure. But, you know, almost like a Stephen Bradbury of mandatory disclosures, we have remained upright in this very turbulent time. And now Asia, Australia, Singapore, Taiwan, Japan, Philippines, Thailand, they're all leading the way with ISSB aligned disclosures. And I think to sort of settle the argument, irrespective of however this forthcoming Australian election will land, the writing's on the wall, right? This is where it's going. And there will be competitive impacts if you're not disclosing, irrespective of, you know, what our in-country requirements are. You know, a good example of that is with CSRD, we do expect it to be rolled out, is that you will be impacted by carbon adjustment, border adjustment tax. If you are exporting to Europe and you're from a country that does not have a carbon management or carbon tax, then you'll be slugged with that. So from a competitive position alone, it's vital that we are disclosing. And then, you know, all those other tail-on benefits of making sure that you are complying sort of become icing on the cake.
Yeah. Well, we had a question to come through just around, you know, we're not at even a group 3. I don't think we're a group 3 reporting entity. You know, what does it mean? You know, what would the requirements mean for us? So What are your thoughts there, though, for obviously those organisations that are smaller, that needing to participate in the supply chain of larger organisations, but then not necessarily requiring mandatory disclosures? So, I think of our own organisation and Aaron, possibly yours. We've been voluntarily reporting for some time now, and it was quite an effort to go through, B Corp certification and climate active, right? It's a lot of heavy lifting for a small organisation. But what would be your message, Aaron, to those organisations that maybe don't fit under in those 1, 2, or 3 groups?
My message would be start early, start collecting the data so you do have that baseline, because it's all a lot more simple when it's small, when you're a smaller organisation too. And as the organisation grows and things become more complex, you're building on an already established baseline and an already established process. I had a mentor years ago that always said, start out the way you intend to continue. And she spoke of that with regards to setting up processes, but also with choosing software and things like that too. Like, choose the thing that you're going to need now that's going to be future-proofed for 5 years, so that you're not doing a re-platforming project, in a year's time. Because I read somewhere that re-platforming will suck up about 3 months of organisational resource in total headcount regarding like adoption of the new platform, the integration of the new platform, and then everybody within the organisation getting on board with the new platform and process as well. So even like looking beyond the cost of the platform, it's a costly exercise to change things if you're not getting in the sort of organised in the right way to begin with. So I'd always sort of recommend that start. And we did not do that, obviously. Heed the advice and did something different, learned the lesson the hard way. We started in a big sort of spreadsheet mess before getting into the Workiva platform, and that was really tough and time consuming. And one slip of the keyboard in a cell in a spreadsheet and like the whole thing's now inaccurate, and good luck trying to figure out where you press the wrong key. So yeah, that's sort of been our experience. I'm very much embracing the spirit of sharing our mistakes today.
Yeah, absolutely. Yeah. Rob, what are you seeing when, in the organizations that you work with in terms of how they're collecting the data? Is it still more spreadsheets, or are organizations adopting other tools or platforms in this regard?
Yeah, well, generally what I'm seeing is organizations such as mine and some of the others that I've worked for, they're still at the information gathering stage to work out that baseline and then work out what the targets will be. But I guess to the question put, if we're a smaller business and we don't need to do it, why should we do it now? Just consider those other benefits that Erin mentioned, that there is a difference between an organization, even a small one, that is sustainable, that focuses on the ESG and has those kind of policies and procedures and plans to improve in that space. There is a difference. As I said before, there's definitely a difference when you go and ask for capital for the banks, but there's all those other revenue, levers as well.
Yeah, absolutely. Jackson, what are you seeing with these smaller organizations, like specifically as they, are participating in the supply chains of these larger organizations?
Yeah, you hit the exact point I was going to touch on, which is, I'll watch my P's and Q's, but the principle of excrement flowing downhill, as companies have to disclose their scope 1 and 2, this is easy enough. It's their, the fuels they burn and the energy that they buy. But then as scope 3 impacts, this is typically in relation to their supply chain. And so as group 1 are impacted by scope 3, they will begin reaching out to their supply chain to get that information from them. Are you disclosing your, your information? Because we, as a disclosing entity, need to know your emissions. First blush, you can use a spend-based estimate. That's fine. But the only way to decarbonize using a spend-based approach is to spend less. And we know, inflation's hot on everyone's mind. Like prices go up. so it's really difficult to spend less. So that primary data throughout your supply chain is the only way you're going to be decarbonizing. And so as group 2 come along, their supply chains will be impacted, and as group 3 come along, their supply chains will be impacted. And so whether you are an entity that is being forced to disclose, or you are one that supplies to someone, you will be impacted by this. And so it's certainly and the legislation is crafted in such a way that it does have a wide-reaching impact to companies that are within those supply chains. So I think the answer to the question is, how valuable do you want to be to your customers? And part of that way is being able to be an entity that discloses your information, is accurate and transparent. So then when called upon, either in a mandatory way or through your supply chain, you have that data and you're not upending. And as Erin said, you're not re-platforming to get the data in a rush. You're ready to go.
Yeah, and we're seeing that a lot of organizations getting ready to do dry runs, in the first couple of years, and just making sure that they're ready for that reporting there. Yeah, good. We've talked about a few advantages to sort of moving beyond just, our compliance in terms of doing this work, in terms of attracting investment and environmentally conscious consumers, etc. What about talent? Do any of you have a perspective on whether this is, Erin, looks like you you do. Yeah, you got.
Big time. Yeah, it's been a really big thing for us. We've always had a strong stance on impact and sustainability, and since doubling down on that with our B Corp certification and our 1% for the planet and our climate active, and getting involved in other things like Comms Declare, where we pledge not to promote the work of fossil fuel companies. All of those kinds of things have lended themselves to us being a very appealing employment choice for talent. It's boded well to attract top talent to the organisation, and I've been really impressed at the calibre of people we've been able to attract as a relatively small organisation. We're about 10 people. Typically you kind of got slim pickings as a smaller org, because in the marketing and creative space, people generally want to work at those larger organisations that are getting big briefs and big budgets and exciting projects. And I think happily we're getting some big briefs and big budgets and exciting projects, as well as getting some top talent as well, both because we've got those certifications and that ESG framework in place, and that's been appealing to both larger organisations that have this as criteria within their procurement policies, as Rob mentioned earlier, and also for talent who are looking for, particularly Gen Z and millennials, who are looking for roles that align with their values and give them a sense of purpose as well as a sense of achievement from their work.
Yeah, absolutely. If we link this back, I guess, to where we started, and a lot of people would have be watching this webinar because they're kind of interested in the regulations and the frameworks that are coming through. But what do you guys see as the link between that transparency, but then also trust? We've touched on it briefly, but just in terms of strengthening your reputation as a business there, how important is this in terms of trust building with different, not just consumers, but other stakeholders?
Who would you like to go first?
I can comment on that, but I don't want to hog the mic.
No, I think Erin, I think you're closest to this. I think you should go.
So when we look at, say, AASB for S2, that requires companies to disclose their climate-related risks, their emissions and their strategies. And when done well, these disclosures absolutely reinforce your brand's credibility. They show that you're walking the talk, and they help build trust with consumers, employees, and investors who are increasingly, impact and environmental sustainability conscious. And then when you think about, making green claims as well, you need to have the data to back that up. And we know that making green claims typically also results in better performance of your products and of your marketing. But you do want to make sure that you're not being kind of caught out by the watchdogs and the regulators who are cracking down on greenwashing. So from a trust perspective, we say it is highly valuable. The other thing I'd add to that is that trust as a sort of currency is decaying in general. Particularly you can see this following COVID, the trust in institutions has gone off a cliff. And, we once used to be, we would be told things from the government or the health institutions, and a lot of that has become unstuck. There's a lot more misinformation and conspiracy theory content that just spreads so fast thanks to social media. Social media does the good stuff as well as the bad stuff. It amplifies everything and it doesn't discriminate. So we really see that there's huge value in getting the reporting right and having those claims substantiated to build that trust, because trust is at an all-time low. So anything you can do as a brand to increase the trust in your organization can only be advantageous.
Great. Thanks, Erin. Rob, Jackson, any other things that you might add to that at all?
Just I guess briefly, this is going to eventually just flow through into the financial reports. So as a finance professional, that trust is really important to rely on the numbers that are in there, and the numbers now are going to include carbon reporting and ESG reporting. So as a finance professional, it's just so important that they're right. It's just so important. And look, there is going to be a learning curve, and there's going to be mistakes along the way, and that's absolutely fine. But ultimately, it'll be up to people like me to make sure that what is in that financial report is right. It can be relied upon, and stakeholders can be trusted that that is a true reflection of where we're at. So that trust piece is really important, especially from my perspective.
Yeah, and I guess while I'll pop this slide up, is that I guess it for those that hold a director's role or office in their organisation, this I guess reinforces why having more time to prepare is going to be really important for you, because there is a declaration that's required from ASIC around those there as you do those disclosures. It's a really big shift, I think, isn't it, for the finance teams there, because this is like the first time that they're having to really report on non-financial data and metrics. And so there's going to be, as you say, that learning curve. And for those that want to have a look, there's a download after this on the resources page just around ASIC's most recent RG 280 regulatory guidance there, which is really useful. Gives you a bit of a sense around how they're going to be implementing that and going across that. So you can definitely have it as a independent financial report and annual report and your sustainability reports. Rob, do you think where do you think you would go as a CFO? Would you look at integrating the reports, or would you keep them as separate? What are your thoughts?
Well, just my own personal opinion, I'd put them in one. I mean, it's all about the business as a whole, and sustainability is part of that. There's no longer, it's just looking at the numbers, and honestly, the same example as the banking situation that I mentioned before. Like, it just used to be, what's your LVR, what's your income, what's your profit. It's more complicated than that these days. So for me, it's an integrated part of the business. So I'd put it all in the one report.
Yeah, Jackson, I think you're seeing that with a number of your clients, right? Is that correct?
Yeah, I think there's a couple of themes that both Rob and Erin have touched on, and that is this sort of great harmonization of sustainability and financial data. And the same thing applies where people have sort of divorced this notion of sustainability and profit. And I think the original question was sustainability and talent. And the real answer here is that it's actually all one. It's your entire business operation is dependent on both your sustainability data and your financial, and that profit and sustainability principles are not at odds with one another. In fact, they're complementary to one another. And we see that being reflected in the market. We see employees wanting to stay at companies who are doing well. Gen Z and millennials are looking for greater purpose, and part of that purpose is derived by the notion that they're making an impact. And that impact can be derived not just from cash, but also from the environment they operate in and the ability for the company to do well and to build that trust. I think the other piece here is around what the legislation is saying is that it's saying that the principles of sustainability reporting and financial reporting, that one is not less than the other. In fact, sustainability data will be treated in the same way it will as financial data. I think if you get the numbers wrong around your scoped emissions, and you have to restate that, that'll be seen in the same way that a financial restatement will be considered. And so it's, I don't want to necessarily revert back to that stick, because it's intended to like start where you are and improve over time. But don't be confused that this is not serious. Like the government is taking it seriously, and as a result, organizations need to no longer consider these as separate, disparate theories, and rather it is your entire operations, and that there are myriad other advantages to doing it properly.
Yeah, and I think those are really important points. We'll see while we're talking about carbon and climate a lot today, right? It'll just be a matter of time until we're looking at biodiversity requirements and nature-based reporting as well as businesses. So this is all part of that journey. So let's have a talk about some of the challenges that we've been encountering, in terms of actually going, looking at carbon and climate accounting and reporting. There's a few there on the screen, but Erin, just maybe bring it to life. Like, what was some of the challenges before you started using a tool like Workiva Carbon? And yeah, tell us a bit more about that.
I'm the poster child for Workiva Carbon, because our spreadsheets were a hot mess. It used to take so long, so many people, so many versions. When you're on like spreadsheet file number version 57 and it's still not right. I think the process was very arduous in order to be accurate. And we were also at the same time kind of learning a lot of the sustainability and emissions reporting and carbon accounting terminology too. So it was I think to say it to one word to describe it for our team was we were bamboozled. We were really kind of in that space of being like, what's a boundary and what's this and what does this acronym mean, and all these things that felt like if we got them wrong, it would filter down to everything else being wrong, and then we'd have to redo everything all over again. Whereas, being in a platform, you can toggle different things on and off and try things and test it out a bit more easily. And even just like, we use Xero for all of our accounting, I'm sure as many organizations do. And I know that many larger organizations are using bigger platforms like Oracle and NetSuite and Workiva Accounting as well. And all of that sort of being able to import or integrate directly is just so much easier than manually copying and pasting this stuff into spreadsheets and hoping that you don't break a macro or a formula in the process.
Mm-hmm.
That was sort of our reality. And that was the trigger for us kind of going when sustainability reporting came around and everybody wanted to groan, hide, take sick leave, run the other way. It was clear to us that we needed to have a platform within our organization that mirrored the kind of tools that we were using across the rest of the organization. We're using digital project management tools. We're managing clients' programmatic advertising campaigns using platforms. We're living in the cloud constantly. So why are we in these spreadsheets for this one particular part of our business? So it made sense to just go cloud-based for this as well.
Yeah, good. Jackson, you work with so many different clients across many different industries. Do any of these challenges that are on the screen here resonate? Are there any other ones that you're seeing that are key?
Yeah, so maybe I'll just start off by saying, like, I obviously work for a company that has a platform that helps here, but we've spent a lot of time trying to encourage people on this call that, like, don't let perfect be the enemy of the better. And in that way, the whole world still runs on spreadsheets. So a spreadsheet is better than a poke in the eye. If you haven't started, start on a spreadsheet like today, because in 2 years' time, you're going to have your scope 1, 2, and 3 calculated, and that task will still be there. You just won't have done it. So start now, start badly. If something's worth doing, it's worth starting badly and then improving over time. Yes, all of these challenges remain consistent. I think, as as spreadsheets go. It's a great utility, but it's, a lot of the problems are also sort of user led. We have I have a story of a contact who, a lot of the concerns around spreadsheets are getting the right emission factor. But actually, it's not just that. It's also the conversion rates. I know someone who was miscalculating their natural gas usage for 10 years because they were converting to cubic meters instead of kilograms. Now, unless you have the tools, the oversight tools to be able to verify that, it's reliant on the user being totally au fait with that spreadsheet. And not to be too morbid, but if the person operating that spreadsheet gets hit by a bus, the business has no continuity around that spreadsheet because they become so big and unwieldy. So, as I said, don't want to talk down spreadsheets. It's an amazing place to start, but start there and then improve with tools.
I think the data visualization that you get in platforms really helps validate like discrepancies as well that you just don't pick up in a spreadsheet. I know you can make charts and such in your spreadsheets, but you sort of don't necessarily, and they're not as easy as when a platform has it built in. And we had a similar thing where when we got all of the data into the platform and we're looking at the visualizations, it was like our water usage was like 10,000 litres a month or something. And we're like, what? Like, we're in a building, we're in an office, we've got a kitchen sink, we don't even have a dishwasher. Like, we're just a little, creative studio. What on earth could we possibly be spending 10,000 litres like a month on? And it turned out that our water was being calculated at the base rate for the building, but there was a hairdressing salon in one of the spaces downstairs. So they would have been using an enormous quantity of water, but it wasn't being proportionately, like if we divvied it up proportionately based on square meterage, sure, that was our share. But actually it didn't make sense based on the true utilization. And we wouldn't have seen that as a flag of an inconsistency or a discrepancy in the data if we hadn't have been able to more easily visualize these things. And we'd been kind of happily submitting those reports from spreadsheets for years, saying our water usage was much higher than it actually was.
Yeah, so definitely that visibility that you're getting is really key. Jackson, this question came through and just leading into the last 5 minutes of the webinar, but just what are the audit and assurance requirements around this? So maybe you can share some insight into that.
Yeah, well, I'd be really keen to hear from Rob around this as well. I think he's probably the expert, but I think what we see is, the first assurance requirement is to go through what we call limited assurance. And this is just really to make sure the calculations are correct. But then after that, it gets a little more in depth. It moves into a reasonable assurance. Reasonable assurance is more of an impact to the business where organizations have to really disclose how they got the data, who put the data in, even things around we've spoken a lot about quantitative components. If you are developing a standalone sustainability report or indeed even an integrated report, you have to assure the narrative. Is this accurate? Who put that narrative in? Can it be verified if you're making a claim? And so, we expect that this will be one of the toughest parts of the process. And so far, it's an unrealized pain for a lot of companies. Conceptually, it's kind of like, I've signed up for a marathon in November. Well, that'll hurt in November. I don't have to worry about it now. But know that, marathons hurt. So prepare now for that end state, and you'll be, way better off. But I think Rob's probably the person best to.
No, I think you pretty much summed it up, Jackson. And for other financial people, it's not going to be too different to an audit, to a financial audit. It's just going to be an ESG audit. So you just got to make sure that your assumptions are good. You can back up the numbers. And just to touch on the points before about spreadsheets, like definitely some information is better than no information. So if you collect it in a spreadsheet, great. The tools that Jackson's company does is really good because it actually can speak to some of those data sources, and it can get you live data on your emissions. So that's just more helpful, and it makes it less risky, I guess, of transposition errors and mistakes in spreadsheets. So that's one of the benefits. But yeah, I mean, an audit's an audit. You just got to make sure you can stand behind the assumptions and the numbers that go behind there.
Good, good. All right, last couple of minutes of the webinar. We did have a few questions come in. Any that we don't cover off today, we'll certainly reach back out directly via email for you. Just in terms of tools and resources, there's we'll email this out there, but there's QR code there if you want to go out to the downloads page there for the resources that could be helpful to you. Erin, if there was one message that you would leave the team, those watching after this webinar and this great discussion we've had, what would it be?
I think it would be, don't be afraid to get started and find ways to validate your amazing claims and share them with the audience.
Yeah, awesome. What about yourself, Rob?
3 points would be ask for help. If you're not sure, it's new. It's definitely new for me. It'd be new for like everyone. Start collecting baseline data, even if it's really small stuff, really simple stuff, and consider investing in tools to help the process.
Yeah, awesome. Jackson, what about yourself?
I'd say that this is complex, but it's not hard. You know, or maybe it's the inverse. Maybe it's and the idea here is to follow the bouncing ball. All you have to do is get started, and the rest will be easier as you get sort of more au fait with these topics. But it's not intended to be an entirely new system. It borrows heavily from those principles of financial accounting. And so the harmonization between those two principles will mean that you should get a handle on this pretty easily, whether you're doing it manually or with tools like ours.
Yeah, great. Well, just wanted to thank you guys for your input today. It's really great discussion. There's so much detail that you could go into in a webinar in terms of like the technical aspect. But we'd encourage all of the listeners and watchers just to reach out to us with any questions that they might have. More than happy to support you on your journey as you're working through and navigating all of these things, whether that's in terms of your strategy or figuring out your boundaries or what's material to your business, through to some of the tools that we've talked about today that can be really helpful for actually increasing your effectiveness and efficiency in this regard. So I wanted to thank you all again for your time today. It was a really great webinar. I really enjoyed it, and look forward to maybe doing another one soon and continuing some good collaboration and discussion.
Thanks very much. Bye-bye.
Thanks, everyone.
Thanks, everyone.